Welcome, everyone. So glad you're joining us. Listen, if you're here, it means you're totally ready to rethink everything you thought you knew about launching and scaling a business. You are stepping right into the Zero Debt Funding course series. Think of this explainer as your foundational launchpad. We're going to explore exactly how you can secure the capital you need to fuel your big vision. And here's the kicker, without strapping yourself to the heavy burden of traditional debt. Together, we'll break down the real-world data, the exact strategies, and some incredible historical case studies that absolutely prove alternative funding isn't just possible. It's literally how modern empires are built. Let's get right into it. To give you a quick lay of the land, here's our roadmap for today. We'll start with our Welcome to Zero Debt, move right into mastering the crowdfunding landscape, and then look at choosing your funding platform. After that, we'll tackle high net worth angel investors, dive into some billion-dollar success stories, and wrap everything up with expanding your funding knowledge. So, here's the million-dollar question, or maybe the billion-dollar question. How do you build an empire without borrowing a single cent? Traditional business wisdom almost always pushes founders straight into the arms of bank loans, right? Which usually leaves them absolutely crippled by interest before they've even made their very first sale. But today, we're challenging that notion entirely. There is a massive world of alternative capital out there, and understanding how to tap into it is exactly what we're going to unpack right now. All right, let's jump into our first big topic, mastering the crowdfunding landscape. When we look at the baseline of crowdfunding, it basically falls into four primary buckets. First up, you've got rewards-based crowdfunding, where your backers get a cool perk or an early product. Then there's equity-based, where they actually get a piece of your company. You also have donation-based. This is usually for personal or social causes where people don't expect a financial return. And finally, debt-based, which functions kind of like a traditional loan, but it's funded by the crowd. Each of these models caters to fundamentally different types of projects and audiences, and honestly, each comes with its own unique advantages and strategic leverage that you can use. Which leads us perfectly into our next section, choosing your funding platform. Now, the crowdfunding landscape out there is incredibly diverse. It's like a giant marketplace. For instance, if you're launching a creative project and you want an all-or-nothing rewards model, you might look at a platform like Kickstarter. They operate globally and usually take a 5% platform fee plus payment processing. But say you're a startup looking to offer actual shares in your company, Seedrs is an equity-based platform you'd look at, and they charge a 6% fee on the funds you raise. Meanwhile, GoFundMe absolutely dominates the personal cause niche, and they remarkably charge a 0% platform fee for personal campaigns. They just take the standard transaction fees. So what does this mean for you? Well, your strategic choice of platform is entirely dictated by what you're offering and exactly who your target audience is. Let's take a second to contrast the two most prominent models here. With rewards-based funding, you're essentially just pre-selling a product, right? But with equity-based funding, the ask completely changes. You are now bringing on partners who actually own a fraction of your startup. The strategic implications for your business's future are massive, depending on which of these two paths you decide to walk down. It's a real game changer. Okay, moving right along to our next major strategy, high net worth angel investors. So who exactly are we talking about here? High net worth individuals, or HNWIs, are wealthy folks who provide critical capital specifically to accelerate a business's growth and market expansion. And let me tell you, securing their financial backing is fundamentally different from crowdfunding. When you bring an HNWI on board, you aren't just getting a check. You're securing a powerful alliance that can radically alter the whole trajectory of your startup. We're talking specialized expertise, deep networks, and some serious industry leverage. To really put this into perspective, let's dive into some billion-dollar success stories. $250,000. I just want that number to sink in for a second, okay? It's a lot of money to most of us, sure, but in the grand scheme of global business, it's actually a relatively small seed. But here's exactly why that specific number matters so much. Back in 1998, the founder of Amazon, Jeff Bezos, invested that exact amount, $250,000, into a little early-stage tech company specializing in internet services. Any guesses? That startup was Google. This early backing was the critical capital Google needed to really develop its core search engine technology and rapidly scale operations. And as you well know, today, because of that early push, Google is one of the most valuable companies in the world. Incredible, right? Let's fast forward to the year 2000. Our next milestone number is a bit bigger, $20 million. This one perfectly shows the power of strategic alignment. Masayoshi Son, the CEO of SoftBank, invested that $20 million into a Chinese e-commerce company called Alibaba. Now, this capital didn't just keep the lights on. It allowed Alibaba to massively expand its market presence and completely build out its technology infrastructure. That single investment literally turned them into the global e-commerce giant they are today. Next up, we have $8 million. This is a fraction of what we just looked at, but the return on this one, absolutely unprecedented. This $8 million came from Jim Goetz over at Sequoia Capital, and it went into a messaging app that was just in its early stages. That app was WhatsApp. So what was the impact of that specific funding? Well, it allowed WhatsApp to aggressively enhance its platform and rapidly grow its user base all across the globe. The return on that early stage investment made history because Facebook ultimately acquired WhatsApp for a staggering $19 billion. Now that's what you call a return on investment. Now let's take a look at the absolute largest personal investment in our case studies today, $100 million. What's really fascinating about this one is that it wasn't an external angel investor. Elon Musk took $100 million of his own personal HNWI capital and invested it directly into his own vision. The outcome? Well, this investment enabled a private aerospace manufacturer to actually develop and launch its first rockets. It pushed SpaceX to become a worldwide leader, achieving monumental, industry-leading milestones in space exploration, all without relying on traditional corporate debt to get off the ground. Pretty inspiring stuff. So, where do we go from here? Let's talk about expanding your funding knowledge. How do you actually apply all this amazing info? Well, we've designed our upcoming course activities to transform this academic theory into highly practical, real-world fundraising skills for you. We're going to bring in guest speakers who have actually successfully raised zero-debt funds to share their raw, unfiltered insights. You'll conduct in-depth case study analyses to identify exactly what makes campaigns succeed or fail. Plus, we'll be running mock pitch sessions so you can simulate securing HNWI funding yourself. You're also going to generate detailed platform comparison reports, and we'll even host expert panel discussions to break down the real dynamics of angel investing. Bottom line, you're going to learn by doing. Which brings us to our final and honestly most important question to leave you with today. Who will fund your zero-debt journey? Will you rally the global crowd with a rewards campaign? Will you offer equity to startup enthusiasts? Or maybe will you build a pitch that secures the backing of a high-net-worth angel investor? The capital is absolutely out there waiting. It's time for you to go get it. I really hope this explainer got your gears turning, and I can't wait to see you in the next module where we start putting these exact tools to work.